BIS Commodities, just taking a look at the markets for the week. We'll start out by just taking a look and see where we close for the week. Taking a look at December corn, we closed down 13 cents on the week at 427, which was a 3-year low in December corn futures, or the nearby futures as well. Soybeans closed 44 cents lower at 1266. Those are the November beans, which are in delivery right now, and nearby lows as well on the charts. December cattle closed 18 cents lower at 132.15. December hogs closed $2, a little over $2 lower at 88.37. And wheat closed 23 cents lower on the week at 667. The weakness did spill over into the energies as well. It looks as if all the energies are going to close lower on the week. Specifically, crude broke $95. The last time we seen it break below $95 was last summer in June. Equities fairly steady on the week. Taking a look at the corn market, or the grain market in general, specifically the corn market, the month of December we've seen a 15-cent trading range. That's the narrowest or tightest range we've seen since December of 2006. So not a whole lot of interest in the corn market this past month, and we did see our weekly export sales, which was accumulation of the previous 3 weeks this week, and we were looking for a fairly large number, and we did get a fairly large number, much larger than expected. And with the release of that report yesterday morning at 7:30, we've seen both corn and soybean futures sell off, and it was the classic buy the rumor, sell the fact, even on the very bullish number. So taking a look forward, the trade is basically focused on next week's Friday's supply and demand report. The concern is how big of a supply do we have, and obviously there's a lot of concern in the trade that it's fairly large as we continue to push futures prices lower. Taking a look at the cash markets, the cash markets is still fairly firm for soybeans and corn. Soybean futures and cash are telling us both to sell it prior to river close, take advantage of that premium with an inverse in the market. And the corn market is telling us two stories. The futures market is telling us there isn't a supply concern, because we do see a carry in the market from a futures perspective, suggesting to store it and sell the carry, whereas the cash market is still very strong, with the cash price here located in Cedar Rapids priced at a better premium than next June or July time frame. So the cash market is certainly suggests sell your cash now, and that firm basis isn't due to the lack of corn. We obviously know there's a plentiful supply at this moment. It's the lack of their ability to buy corn at the moment. And again, the next week's report will be the major factor. I would look for a very quiet week for the most part next week as well in corn, soybean markets, futures markets. Taking a look at cattle, we've seen record cash prices last week. We've seen a fairly steady cash trade this week on a lighter volume. Kill rates the previous 2 weeks for cattle has been the lowest numbers for that time frame going back to 1979. So that is showing the tightness we're seeing in the supply out there. We did see the choice cutout reach what I believe is a record level at 205, over 205 this week. We did get a cattle on feed report delayed from USDA's time off yesterday, and it did show cattle on feed numbers at 92.3%, right in line with what the trade was expecting. Placements are at 101%, still right in line with the trade was expecting. Marketings were a little higher than expected at 106. I was expected to add a little bit of support to the market with the higher than expected marketings, but we did see more beef and pork going into the freezer as well, as cold storage was up for both cattle and pork. We did see the hog futures market sell off hard the end of the week, the last 3 days of the week, after making nearby chart highs earlier in the week. A lot of volatility, the uncertainty of the supply out there, with the PED virus still making headlines across the nation, and wondering how much has it limited the production side of hogs. Weekly kill rates should be higher, or according to the last quarterly pig report, we're expecting larger numbers. So those larger numbers are still yet to come, or they're just not there due to the PED virus. We did see slaughter weights up about 5 pounds from last year. Maybe it's the cheaper corn is allowing us to hold those hogs a little bit longer. But certainly when you take a look at the crush margins for both cattle and hogs, it's suggesting some very profitable margins with the ability to lock in those margins. It certainly should be something to take a look at. I guess the next question for the livestock markets, or for beef and pork, is going to come from the demand side. We know we have a tight supply. The question is, will we be able to maintain demand at these price levels? If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com. Thanks.